Right, look, what I'm about to show you is something I've developed as a scalping strategy, probably over 7 years. It took me a long time to get to this point, but I'm convinced, absolutely convinced, that it will change the way you look at markets in general, simply because the success rate is so high. And also, on top of that, whilst it's a scalping strategy, the moves are more profound than just a scalp in and out, although it is still very good at scalping. And so I'm going to show you that. So stick around. All that I ask in return is that you simply subscribe and like. I am trying to build the channel out. I'm going to show you everything from the settings so you know exactly what I'm seeing. And let's get in with it. So look, there's a few key concepts that we need to understand, right, before we dive into the strategy, which I will show you. But it's all around standard deviations and, more to the point, understanding what a standard deviation is, right? So first thing I want to show you is what a standard deviation is. A standard deviation is a data set. In our case, it's points on a chart. But in other cases, it can be tests, right? It could be a test in school, which shows outliers and where the majority of people will lie. And so what we're looking at here is what's known as a bell curve. And what history shows us is the majority of the time, most results will fall into one standard deviation away from the mean, right? Which is, let's say, the most popular. And so if you look at this bell curve, if you calculate both either side of that mean, right? So 34.1% of one side and 34.1% the other side, that's 68.2%, right? So 68.2% of the data will fall within one standard deviation of the mean, right? I know this gets a little bit kind of techy, but trust me, you're going to appreciate this. The data set that falls between 1 and 2 standard deviations from the mean is 13.6, which is 27.2%. My maths isn't great. But much less of the data set falls outside of the bell curve. What kind of then you start to see is the outliers, right? So what falls between 2 and 3 standard deviations is only 2.1% either side, which is just 4.2%, right? So 4.2% of the data falls between 2 and 3 standard deviations, and then 0.1 either side, which is 0.2%, goes above and beyond 3 standard deviations. So just keep that in mind. It's a really, really important thing to understand, because what I'm going to show you lays heavily into this statistical model. And so to bring it back around, I've got NASDAQ currently on the screen, right? This is the 1 minute chart. This big long line here is the candles, but I've really zoomed in. And what we're going to do is just go right the way back. We're just going to pick a random day, right? And I don't know how far back I'm going to go. I'm just going to keep on swiping until I get to the point where I say, right, okay, so that will be here. And we'll put the replay tool on and we'll stop it there, right? And then we'll expand. And there's a couple of really important concepts to understand. There's 2 elements to this. I'm looking for 2 things to happen before I'm going to take a trade. We have to take liquidity, right? Now, when I'm talking about liquidity, I'm not talking about ICT crap. I'm not talking about fair value gaps. I'm not talking about order blocks. None of that. What I'm talking about is really important high liquidity pools, and they are usually from top to bottom: previous day high, previous day low, session high, session low. What's a session? A session is either Asia, London, and New York. Those are the 3 main sessions that I'm talking about. And so if we have taken a session high or the previous day high or the previous day low, and we are at least between 2 and 3 standard deviations away from the indicator I'm going to show you, then I'm going to take a trade. So the standard deviation I'm talking about is the VWAP, right? And the VWAP is essentially the volume weighted average price. I'm just going to take this back a little bit further to here, right? Because that's the start of the session. So this is a bell curve, right? That center point here, this white line, is the 0, right? So if you look at this again, this line down here is the VWAP, that center point. And then as price drifts either side of that VWAP, the likelihood of it staying there is about 68% in terms of how often in a session it spends its time. Then we get into the more outliers between 1 and 2, much less of its time. And then between 2 and 3, much less of the time again. And then beyond 3, very, very infrequent. What these green lines and red lines represent is those standard deviations, right? So this is the second standard deviation, and this is the third standard deviation. I'm not really too interested in the first standard deviation because it spends the majority of its time in and around that VWAP, right? What I'm really interested in is the super exhausted between 2 and 3. This is this area here and this area here. They're the ones that I'm really interested in because they're where we know from data that it doesn't spend an awful lot of its time. But remember, the other element is that I have to see this in line with a liquidity. So when I'm talking about liquidity, what exactly am I talking about? Well, I'm talking about the sessions, right? So forget what we're seeing here. We're going to hit play now, and we're just going to narrate exactly what I'm looking for. I can't believe I'm sharing this. This is what I've developed over a long time to get to this point. But I am trying to grow my channel, so it is what it is. So when I'm talking about the sessions, we have Asia that starts the session, then we have a little overlap and we come into London, and then we have another overlap which then starts New York, and there's about an hour difference between Asia and London, where an hour where Asia's closing and London's opening comes into play. Or maybe an hour and a half, maybe it's 2 hours actually. I'll double check. And then we have 2 hours overlap where London is about to close, but New York is opening. So there's about a 2 hour overlap there. Those are the two biggest areas where you get most liquidity because there's two markets open at the same time, and they are what's known as kill zones, right? Or it's where more liquidity is going to be in the market than anything. So what we're going to do is we're going to concentrate on those two elements. Now I've just took a number of passes back to figure out that we're on a random day, which is the 24th of April, right? So I can't remember what happens on that day, but we'll see it anyway, and I'll guide what I'm looking for. So we're going to hit play. What I'm looking for now is to see what Asia's done. I'm not trading in the Asian session. What I'm looking for is what has Asia done? Has it consolidated? Has it really ranged? Has it moved up? Has it trended? I'm looking for what key signals that's give me to then articulate how I'm going to respond when London opens, and then what I'm going to do if I'm going to do anything when New York opens. So let's hit play and let's just see what happens. You can see now, because volume weighted average price is a metric of volume and price action, it's relatively small at the start of the session. This resets every single day. So Asia's just opened up. I'm going to zoom in a little bit here. And I'm just letting it do its thing, right? I'm just kind of letting it see where the top and bottom of the range is. So just so you just to take a pause, that's the current top of Asia. And that orange line there is the bottom of Asia. So this is the current Asian range. So when I'm talking about the high and low of the range, I'm talking about these lines here specifically, okay? Let me expand this out a little bit so it becomes a little bit clear. And then let's hit play. Let it do its thing. What I'm waiting for is, once we've established the range high and low, I'm then looking to see what London does. So you can see here, it's kind of just hitting its above the second standard deviation. We've had a nice little hit here to that third standard deviation, and now we have a high of Asia's range, right? Now we know historically, 0.1% of the time and 0.1% of the time below here, that it's not going to spend an awful lot of time usually, right? But volume will change that. So let's just hit play. We've had a bit of a sell-off. Once it's hit there, you can still scalp these, by the way. You can absolutely still scalp these when it hits that third standard deviation as a way to hit a short at that third standard deviation, simply because of the dynamics of data. However, for more confluence, you want to see it happen once liquidity's been taken, right? That's the thesis. So now London's opened up, right? So we have our range low. I'm going to mark that off. And we have our range high, which is here. So now for me to take a trade, I want to see is take the liquidity of either the high or the low of the range, and we're in that second/third standard deviation range. Ideally, the further out, the better, right? And so the thing that you need to be mindful of is that if you're going to scalp, you have to be able to withstand a bit of drawdown, because it might not just immediately, reject. So you can't just go, right, it's hit the third standard deviation, it's taking liquidity, now I'm just going to, you've got to monitor it, right? And this is why I'm here to kind of guide a little bit on what I'm thinking. So we're currently right within that range. We haven't taken the high or the low. Now we've taken the high. Okay, perfect. So that was a little bit quick, unfortunately, but because of the overlap, right? London and Asia are simultaneously on until 10 a.m. my time, which is here. Where that dotted line is, that's exactly when Asia finishes. And so now we've got more liquidity coming into the market, simply because we've got both London and Asia still trading. So let's just hit play. Let's just get Asia out the way. Now it's still, Asia's still in play. So Asia has now finished here, right? That was Asia's last candle. Now you can see here, London's high is here, okay? And Asia's high is here. So we've taken liquidity. Perfect. That's exactly what we want, right? We've also hit the third standard deviation. And the bonus here is that we know that when price gets too far away from the volume weighted average price, which is in essence the true value for the session based upon the amount of volume that's interacted on the order book at different price levels, will dictate what the VWAP is. And so now we know we've got a short in there, we've taken the high of Asia, and now let's just hit a few steps in. Now we've come down to VWAP. So that move alone, right, as a scalp, let's say we actually got in right at the VWAP, which, sorry, the third standard deviation. Now that's a 27-point move. If you know anything about NASDAQ, 27 points is a very substantial move, right? But it can get better. So first one in, nice scalp. We've taken a high. Let's continue. Now we're on the sidelines, right? Because we need some activity. What are we looking for now? There's Asia's low. Okay, so Asia's low of the day. So there's London's low. It's currently here. We have second standard deviation here, and we have third standard deviation here. This zone here is really where we want to be thinking about a potential long, right? But we've also got to be mindful of the fact that it's consolidated for a while, Asia. You can see Asia's very much consolidated. So what London likes to do is manipulate first, right? It likes to hold, it likes to take the liquidity and then really drive down. So there may be an element here where price really skips down beyond what we'd expect, but we're just going to hit play, and it's up to you as whether you decide to dive in at this VWAP, at this second standard deviation, or even the third standard deviation. But as volume increases, so will the bell curve start to widen, right? Let's see what happens. So as you can see here, right, we smashed through Asia and really came down into this third standard deviation. Now the question would be, where's the potential that this can go? How far down can it go? Is it aiming for like a weekly low or a daily low? We don't know. But let's just hit play and let's see. This is the weekly VWAP, right? So that could be a zone that it's going to. But if we decided to take an order here at that third standard deviation, let's see what happens, right? So I mean, there alone, right? If you took that move again, if you'd got in at the third standard deviation. Now I'm on the 1 minute time frame here, right? So let's say we got in about there to there. Even that's a 17-point move, right? We're clear that we've taken the low of the VWAP, right? We've been patient because we know this is the zone that we want to enter. It's a nice move. Now, whether you decide to hold that or not is purely dependent upon yourself. Are you hoping for the Hail Mary and a big reaction? Remember, we don't have New York opened up yet. All we've got opened up at the moment is London taking the high and low of Asia. But now we've come back into VWAP, right, which is back into value. So now, as a trade, you've got a really nice move at the start of the day here, simply because we were waiting. This wouldn't have counted because we hadn't taken the liquidity of Asia. We did take it here. We got a beautiful move all the way down. If you held it to that third standard deviation to the downside, I mean, as a move, I'm not here to tell you how to trade. I'm just showing you the system, right? That's a 69-point move, even if you took it to the third standard deviation. Now move to the upside if you decide, okay, because everything is always about balance, right? Price going out of balance, seeking balance. So balance is really the VWAP. And so you'll get a lot of time where it will range, come back into VWAP, maybe pass it, come back into VWAP. That's why it's such a powerful tool. But now we've got New York opening up, and because more volume is coming into the market relative to here, we're starting to see expansion of those deviations on that bell curve. So let's just hit play and continue. We're on the sidelines now. Now we're waiting for another opportunity that comes along. But now we have two elements what we've got to be mindful of. Right now we have London here, low, and London's high. So really, what we're looking for is a potential move at these zones at VWAP. Now, this is something you will learn over time. What tends to happen in markets is they will consolidate in one session, they will manipulate in another session, and then you'll continue that expansion. So there's every possibility that what New York might do here is really expand higher because it's gained liquidity from the Asian market, took the high, took the low of Asia, and now New York may now continue and raise that bar higher. So whilst I appreciate I'm just showing you the brass tacks here in terms of like the strategy, you also need to understand a little bit about accumulation, distribution, and expansion. That's something you're just going to have to develop over time. Let's continue. So we're looking at, wow. So what happens here? So we've taken, that's clearly a news driven event, right? That's 1:30 UK time. So huge move. And overall, now we've got a huge bell curve, right? So I would always suggest you do not trade the news with this because, quite frankly, it can be quite dangerous because a lot of the time, that big, huge amount of volume that's come in is completely, smashed through the standard deviation lines and you're just waiting on the sidelines, right? So there are ways in which you don't trade this. Perfect time to trade this is very much consolidatory, right? So it's kind of ranging up and down. So if we continue, you can see already the big difference in the volume that's come into the market here. I'm just going to expand this out a little bit. So now we've basically taken the high and low already of the sessions. So they're now they're in there. So now we're just looking for, do we want to take a trade, in this zone and in this zone? So let's just keep it play and see if any opportunities present itself. Sometimes it's better being on the sidelines, knowing when not to trade than when to trade, right? That's the key. Now what we've got here, by the way, these boxes, they represent that liquidity of the crossover. So realistically, what you're seeing here is the end of London's session with New York still in play. So because volume is reduced from that initial load of element that came from the news event, starting to contract again, right? Let's just expand this out a little bit. And I imagine with such a big move like that, we may not see too much more by way of anything other than consolidating, right? And what consolidation really means is it's just building liquidity, highs and lows. You can see right now it's just hovering around the VWAP. And so this is probably going to close out the day. There would have been two really, really good trades in there that you'll have seen. That would have been, 60, 70 points overall, which is a nice move, right? Not to say you've caught all of that, but it's still a really nice move. Let's see what happens in the next day. You'll know when they end because it'll just draw a line for the session ends. And this is the session end now, right? So let's just move it into the next session. So we're now into the next day. So we took two trades that would have been pretty decent. You can see here right now it really kind of consolidating. We're just kind of Asian sessions just about to start. There's Asia. Like I said before, we're building the high and low of Asia. We're using that as a template to figure out what we want to do. Now, already from the start, is looking very consolidatory. So I expect some sort of expansion in New York, right? Let's hit play. I wouldn't take a trade in the Asian session. We know where the highs and the lows are. That's great. Let's just wait for London to open up. London's not far from opening up. There's the kill zone. We know where the high is. We know where the low is. Here's London. So now, as I say, what we're looking for here is whether we take the high or low. So so London is very close, if you like, to where Asia's high is. So we're just gonna pull this out a little bit. Let's see. So there's the low. Now I just need to wait and pause. So we've taken the low. Just waiting for this to stop. It's continuing on. Okay. So this was the low of Asia. Okay. This is the low of London. So we just nipped into that third standard deviation zone between 2 and 3. And so, if you like, what I always like to wait for is at least a retracement back to the VWAP, right, which would be 38 points. However, even a 27-point move is substantial, right? This looks small in comparison, but if you know anything about equities and futures, well, a 28-point move is a substantial move, right? And all we did, same thing again. We waited until we took the liquidity from the Asian low. We waited until we hit the third standard deviation, or between 2 and 3. And then we got a nice little move up. Same thing happens again right here. What's that move? So there's two moves there that you could have got in right at the deviation line. This may even come back to VWAP, right? But there's the first trade for a nice 27-point move or 28-point move. Here's the second one, which would have presented itself in the London session for another, well, potentially, let's see, we've got what's that? We have a 26-point move at the moment. Now, with a bit of risk management and, putting your stop just under here to break even, who knows, you can let this thing run, right? It's creating high and lower highs. And just if I pause there, so biggest move of that one was there, right? Cherry picking here. You may not have got a 30-point move. You may have got out anywhere here, but you are your arbiter of your own way in which you take profit, right? All I'm giving you is the entries that I look for time and time again. But now we have a new subset of data, right? So we're not really interested in the Asian low anymore because it's already been taken. What we're interested in now is what happens with London. We now have the kill zone between just before New York opens, that first hour. So we know New York's not far from opening up, and we're starting to create some new dynamics. Now, whenever we're in this zone here between 2 and 3, we know it's a fair assessment to expect some sort of a response. But like we've seen before, news events like half one, which is here, can really upset the apple cart, right? So we're just kind of sitting on the sidelines and letting it do its thing. So let's hit play. News event, bang. Okay, so what happened there? News event was a positive one. I mean, look, this would be easy for me to say, but you can see what happens here, right? Price initially comes down. Where does it come? Right into that third standard deviation. I mean, would you risk it? I mean, can I take that as a bonus to say, wow? I mean, look, 170 points. I mean, what's not to like about that, right? Even if you just took it to the VWAP, it's 81 points if you took it to the second standard deviation. I mean, these things happen so fast, you probably don't have too much time to even think about it. It just does its thing, right? But time and time again, it's being used as a target to push price up again. So that would have been a fabulous move. So where's London high? There's London's high, right? We now have London's low. So this is still London/New York, but until London closes, which is 5 p.m., which is all the way across here, really, it's still London/New York at this stage, right? So the high and low here is derived both from London and New York because they both play into that game. So let's just let it play on and do its thing. Let's wait for London to close. Here's the closing session, which is a 2-hour period. Of course, we come back into VWAP, right? And we probably hover around here and consolidate for a little while, simply because in reality, London's now closed. So the opportunity is, I mean, look, we can just see here, New York's high has just taken the high of London. So tick box exercises, we take previous session high or low. Second tick box exercise, we are in between somewhere between that second and third standard deviation. So, what's the move there? It's 29-point move. I mean, it's still magnificent, right? On a move by move basis for futures. If we play, will this be a much greater move? I mean, that's why I said before, it's a scalping strategy. But you can also use it to really give you some good, because think about it, right? When you are overly exhausted between that second and third standard deviation, there's a high likelihood that at least it's probably going to come back into the VWAP, right? Where this doesn't work so well is when we're on mega trend days, when when London takes Asia and then New York takes London, and it's just not stopping. Sometimes you can get bit. You've got to be careful to think, right, I'm in a trend day. I'm not going to try and fade the market. I'm just going to let it do its thing. Recognize that and don't trade with it on days like that, right? Hence that, right? So what we've seen here is a nice move, right? We still would have got a bit of a move there in terms of probably a 30, 40-point move. But now price is coming into the outer Hebrides, right? Really into that territory where if it gets above here, the likelihood of it staying there is like 0.2% in terms of its, how much time it spends there. So even on crazy trends like this, that's the point at which you're looking to fade, right? So, if I take a chance here and do a short here, right? It doesn't really matter where my stop. I don't trade with stop losses, right? I just don't. And because I have no idea how high or low this is going to go, but I'm just looking for enough of an opportunity that gives me a fair amount of feedback, right, in terms of price. So let's just see. What I'm saying is, I'm using data to decide my decisions. That I know in these zones here, there's a very limited opportunity time it's going to spend here, but that's not to say it won't continue on. You're just using data to inform your decision. So if I play, let's see what happens. Wouldn't have been the greatest, right? Now, is because so much high volatility and volumes come into the market, it's the band between the second and third standard deviations really expanded, which is why at the start I said this isn't a silver bullet. You've got to recognize sometimes that even though there's a less likelihood of the total session time for it not to spend the majority of its time within this zone, it's still a fair significant move, right? Your opportunity here, though, is to think, okay, well, right now what I'm looking for is we're in this third standard deviation, and it's not showing any signs of moving on. What I'm looking for is how it reacts to this zone here, because this can now act as a bit of a uh, support zone. So if we break that, then I'd be interested in the short. If we don't, I'm gonna let it do its thing, right? So we'd have lost that trade. I'd have probably closed. I wouldn't have used a stop loss. I'd have just closed that trade at whatever that loss is, right? Now we're starting to break down a little bit. We're getting underneath that second standard deviation. And now eventually we do break down, right? Or at least I think we do. And now we're into that kind of low zone again. And then a new day starts. So, what this system is really in a nutshell is looking at where markets like to drive price towards, which is usually session highs and lows, and then looking at how it let me just check something. Yeah, looking at how price reacts when it hits that liquidity, and are we in a really exaggerated zone? If those things come into play, then you are in a really good spot, because it's about edge, right? It's about gaining an edge on the market and putting things in your favor. So it's not a flip of the coin, heads or tails, 50% it goes up, 50% it goes down, but you're using other elements to kind of give you that extra 5% swing in your favor, that you're going to win more times that you're going to lose. I hope that one was really interesting for you. It would really help me out if you just subscribe, like, comment if you agree with this. If there's things that you don't agree with, let me know why. And let's get the debate going. I also have a Discord server. If you are a trader, then feel free to get involved. Where this really helps more often than not is when you trade with larger capital, because the moves are much more significant. So I'm a prop firm trader. I trade with Apex Trader Funding. You can see that link there. There's 80% off at the moment if you want to go and grab that 80% discount. Use my code or don't. Doesn't really matter. But the bigger capital, the bigger moves. So that's why scalping, like 29 points, trust me, that's a really big move, right? Specifically if you're trading with 2 or 3 contracts at a time, that is a superb move. So that's it really. Hopefully you got a little bit out of this and you enjoyed it. Drop a like, subscribe, and I'll see you in the next one.